One of the genius moves that Satoshi managed to pull off was to leverage greed to incentivize sharing. Bitcoin makes it possible for users to shield themselves from the stupidity of others. This is for the very first time ever. And fortunately for Bitcoiners, it came along at a time when stupidity is peaking at all-time highs. Because no one can control Bitcoin, no one can change the supply or regulate transactions and usage. Once you are in possession of Bitcoin, you are free from outside actors. And in Bitcoin, everyone is an outside actor. And so today on the podcast, we're going to explore this idea by examining the NGU technology that is Bitcoin, that emerges from the system, right? Understanding number go up. And what moves Bitcoin will hopefully allow us to deepen our conviction and be able to understand some of the mechanics that are going on under the hood. So, number go up if you are new to the space. I think by the time this podcast is digitally unearthed in the future, many won't understand number go up or NGU because there won't be a dollar system to go down. Right? It'll be energy system go up. It'll be energy go up technology. It won't be NGU technology. NGU is a way the community expresses the end result of a number of different characteristics that emerge from Bitcoin. These elements all mean that Bitcoin will always increase in value, just utility or usefulness, or said another way, energy access will always increase to hodlers because of the dynamics of the system. But what are some of those elements and how do they work? And why would understanding them help us harden our conviction and therefore make Bitcoin itself stronger? Well, that's the main goal that we are aiming at today. So let's take a bit of a dive into the NGU world. At the most basic level, the price of Bitcoin will go up forever when measured in dollars or any other fiat currency. In fact, anything that is cheaper to produce in energy terms will go down relative to Bitcoin, and everything will be cheaper to produce than Bitcoin. So let's focus on this idea of price for a moment. The measured value of Bitcoin, when denominated in US dollar terms, is most certainly not a straight line up. Right? There are moments, like now, when Bitcoin appears to be experiencing a devaluation against the dollar. This reality that we're experiencing doesn't seem to fit with the number go up tech. So what's going on? What's happening? At the moment, the asset that is Bitcoin is appreciating somewhere south of 200% annually over the last 10 years, yet we are in a 70% plus drawdown. I don't know what the exact number is, but let's assume it's north of 70%, right? Nothing about Bitcoin has changed. It is simply market participants reacting to information that they have available to them. And as we have examined in the podcast series, Bitcoin is incredibly complex and difficult to understand for current generations with roots in the fiat era of understanding. Education around money doesn't exist, and when it does, it is done so from false foundations. And this might be malice or ignorance, but the results are the same. In order to realize the full impact of Bitcoin, you need to understand the problem it solves for, and at the same time, you must recognize how it solves those issues. Not many folks have done the work necessary to be as bullish as they should be. And this podcast is my own attempt to track my work in this department. So, in short, market participants misvalue Bitcoin because they are operating on a partial information. And to go back to the current drawdown scenario that we find ourselves in, it is simply market participants misvaluing Bitcoin because they are operating on partial information that clouds their ability to see the future realities. Right? This provides an enormous opportunity for individuals who do make the effort to bootstrap the network now because of the design of the system. And as I said at the top of this podcast, one of the most genius moves that Satoshi pulled was leveraging one of humans' most powerful emotions, greed, to incentivize sharing. Contact with an absolutely scarce element has never been experienced by the extended order, so it makes sense that it is difficult to gauge how it will react when pushed or pulled. And what do I mean when I say that Satoshi weaponized greed, and how can that possibly be a good thing? Again, back to first principles, how does extreme greed expressed by an individual result in more energy reserves for life, or as we often refer to it here on the podcast, the extended order, which is simply the most advanced energy transformation form of it? Because there is a fixed supply of Bitcoin, there are a limited amount available to be secured. Right? We know that number is 21 million Bitcoin. We know that those 21 million can expand and contract in utility to express the total amount of accessible energy available to participants in the network. The more energy in the system, the more the system expands. But no matter how much energy flows into the system, there will never be more than 21 million units representing that system. Right? The totality of the system is 21 million. Okay, very basic so far, and nothing that we haven't said before. And this is helpful to a point, but as we have discussed in past episodes, we need to make sure we are aware of exactly what is happening at the base level when Bitcoin is being exchanged to fully comprehend how greed incentivizes sharing. Right? The only way to secure Bitcoin is to transform energy in the physical world and produce hashes until you solve for a block, thereby allocating yourself the block reward and getting property rights to the newly released coins, or trade with someone who has done the same, or trade with someone who is at the end of the line of people who have done the exact same transformation from electric energy to Bitcoin. Right? It's pretty simple. And so what has happened along this train? The person you exchange with receives now energy, right? Currently in the form of fiat currency, but this will change in the future. And you get a fixed percentage claim on all future energy reserves of the Bitcoin economy. So where is the greed? The greed comes from rational actors like you and I, who are searching for ways to maximize our own future access to energy reserves, operating in a world where everyone wants a piece of our energy for free. If you are rational and you have expended the energy to transform enough energy to create reserves that you don't immediately require for survival, you know how difficult it is to do so. Right? You don't want to waste the fruits of your labor. You want to store it so it can't be bled out by others at a minimum. But it would also be nice if it could grow as well. Right? It takes energy to transform energy, so it makes sense not to just have it sit around doing nothing. The problem is sharing it requires trust. And people are constantly breaking that trust, which makes it difficult to advocate for sharing. But Bitcoin allows us to share energy with the world without giving up the ability to call on that energy anytime we might need it. Now, if it can't be stolen, and I can always verify how much I have and make sure it is secure, then I'm more than willing to share it to grow. And that's exactly what Bitcoin allows for, right? Because it is open source, permissionless, and decentralized, any energy transformer can access Bitcoin. When I buy Bitcoin, I am putting my energy into the system and someone is taking it out. Now, in the short term, they can plug that energy into another system or asset, but if they don't transform more energy than they got from Bitcoin, their ability to control energy in the future will diminish. At the same time, if everything outside of Bitcoin is losing value year over year because of the design of the current debt-based legacy financial system demands it, then rational individuals will look to place their energy in things that are not fiat-based. Precious metals, stocks, real estate. What happens, though, in an environment where real-time information is more accessible than ever, and the results of the monetary debasement are becoming more and more apparent, well, these assets become very crowded, which means the monetary premium of these things begins to swell. They go far beyond the real-world production costs, which results in speculative values. The risk on these sectors for energy allocation becomes higher and higher and higher. Entities with information on technology advancements that might help here begin to reap the rewards of that work, the work that they have put in to discerning that information, to filtering that information from the noise. Investors start to question why these assets have appreciated at the pace that they have. What would have to be true for that to occur? Investors want more upside with less downside risk. It's not complicated. At a certain point, the allocation no longer works on a risk-adjusted basis for these things that we just talked about, for precious metals, for stocks, for real estate. New information makes itself available to those that would see it. And unlike Bitcoin, all of those items I just mentioned have significant disadvantages. Right? The precious metals are not digital, so hard to store and take possession of, even harder to exchange. That leads to centralization, which is risk. Stocks aren't scarce. They're centralized and can be manipulated by third parties. They aren't bearer assets. Real estate isn't mobile. It isn't fungible, which limits market size. It's highly illiquid and is subject to regulations and taxes of the jurisdiction that it's located in, right? All of these add up to more risk. Every single factor means more risk, and more risk is bad. With more risk comes the possibility of less future energy reserves because of one of those things failing, right? It becomes a house of cards. So if you do manage to transform energy in the physical world to the point that you create excess to your daily requirements for individual survival, where do you store those reserves? They need a home. They have to go somewhere. The less you have to think about that home, the better it is going to be. Why? Because it takes away from energy that could be used to transform more in the physical world. But we're at a crossroads here because we need a home for that energy. The answer is Bitcoin. But there are only 21 million Bitcoin homes. Well, really 2.1 quadrillion sats. And as more actors in the extended order realize the situation, more and more are willing to exchange more reserves for access to fewer sats. This means that as denominated in fiat terms, the value of sats will go up, more energy chasing fewer sats. So as a Bitcoin holder, you are incentivized to share your energy. You give your energy away for as long as possible because it allows for other exchange to take place, which increases total reserves at every occurrence. We know this to be true because there wouldn't be an exchange if it didn't result in more energy out than in. The sacrifice of the holder results in no energy now for more energy in the future. Bitcoin is begging you to share and rewarding you to do so. Of course, if you believe you can transform more energy than selling access to Bitcoin, then you should absolutely invest in that, right? You should absolutely do that. It is in your best interest to transform that energy into even more reserves. But you need to be aware just how stacked the odds are in favor of the Bitcoin network. Because you not only have to transform the energy, but at the same time, every moment you aren't holding in Bitcoin, you are exposed to the alternative system, and that alternative system is bleeding energy at an almost unfathomable rate. And you can't shield yourself from that bleed. So you have to beat Bitcoin while being weighed down by the inefficiency of the fiat system, as well as whatever transformation you're performing. Right at this stage in the life of Bitcoin, it's almost impossible to be more efficient because it is so mispriced by other actors in the space. In short, every other store of value is being manipulated because it can be. And the system needs to feed on itself with further debasement by borrowing from savers and rewarding debtors. Bitcoin can't be manipulated. This reality spreads further and further as no one can stop Bitcoin. Energy reserves flow into the system, trying to gain access while the number of spots remains fixed. Competition drives up energy levels necessary for exchange, and the barrier to entry goes up forever. Because of the fixed monetary policy and absolute scarcity in the hard cap, Bitcoin as a tool can be used for the first time ever as an accurate measurement for everything else. This eliminates noise and amplifies signal, resulting in better energy allocation, which itself results in more reserves. The increase in efficiency means that energy needs a home. Where will it flow? You guessed it. To the best home, which is now clearly Bitcoin. The cycle repeats itself and the number goes up forever. So if you were motivated by greed and you had access to this information, right, the clearest path to future energy reserves to ensure personal fitness in the future is what? Like, what is the path? What path should we be following if you have access to this information now? The simple answer is to transform as much energy as possible in the real world and share it with the most number of entities as possible. If shared long enough and wide enough, the end result will be more energy than you started with. If then, at any time, you can claim that energy and use it for yourself, you're better off. And beautifully so, the extended order is better off as well. Even more poetic is if you aren't motivated by greed and simply want to share your energy with the widest number of entities possible. Bitcoin is still the best path forwards because of the decentralization and permissionless nature of the network. Simply never exchange the UTXOs that you hold for energy in the future, and you have benefited the most amount of people ever possible. But as I mentioned at the start of the podcast, although it's fun to say and it's quite catchy, it's important to realize that number go up is not long for this world. Right? We live in a very unique time period where individuals will still exchange Bitcoin for fiat representations of energy. Think about how crazy that is. Someone is going to give you a claim on energy that can be printed out of thin air that they don't know the full supply of. They're going to give you Bitcoin, the world's greatest money, in exchange for that. There will come a time when the only way to access Bitcoin is with direct energy exchange rather than the proxy that is fiat at the moment. So NGU until number is irrelevant, right? Then it'll be energy goes up. And this is where it might be good to branch off into another area of number go up, right? Oftentimes, things like the halvening cycles of Bitcoin are promoted by fiat-minded investment folks as the cause to number go up, right? In reality, the halvenings simply amplify the results of the phenomenon, right? They squeeze from internally rather than externally. The halvenings are a sneak preview as to the future reality of absolute scarcity being introduced to a system that has never experienced it before. It's important not to be too short-sighted when thinking in Bitcoin terms because over a long enough time horizon, we figure out ways to make things more efficiently. Right? That means less in and more out. Anything that can be produced cheaper than Bitcoin will deflate in price. And just in case this isn't clear, this isn't just financial assets, right? It's everything. Anything easier to produce will be valued lower than Bitcoin. Goods, services, food, everything. Now, the objection would be, well, hang on a sec. What if Bitcoin gets cheaper to produce, right? Won't that cause issues? Well, it might be, but we have to remember here that number go up isn't only about price in fiat dollar terms, remember, right? It's a catchy acronym that encompasses all the emergent phenomenon that come into existence because of what Bitcoin enables. Bitcoin creates a positive feedback loop outside of just price. And the NGU takes place in those domains as well. Every day Bitcoin doesn't die represents another opportunity for rational actors to take notice. Bitcoin can't be killed, so project out into the future, and that is a lot of opportunity to be noticed. Right? With more attention comes more demand, but the supply is fixed. This increases fiat price, or in the future energy price, for access. Increase in value drives volatility, which increases attention. Attention leads to demand as adoption and acceptance becomes more evident. As new adoption grows, so too does utility because more nodes are added to the Bitcoin economy for transformation, right? Network effects kick in and efficiency skyrockets for users. And this is exacerbated by, at the same time, draining energy flows from the legacy system, placing even more strain on an already fragile structure, right? You will be forced to look for alternatives as more and more energy is drained from the fiat system. And as it fails faster, Bitcoin grows more rapidly. It feeds on itself. As overall participation grows and Bitcoin becomes stronger, a whole host of other areas improve, right? More interest equals more business in the space, solving more problems. More creative destruction leads to more jobs. More energy means more competition, which increases security via mining difficulties. More security means higher utility because trust is stronger. More nodes means more decentralization as education improves. More transactions take place, which means more elimination of rival exchange, right? As outside legacy exchange is outcompeted, smaller currencies fail first than big ones. People fleeing those regimes will have the need and drive to seek out alternatives. If Bitcoin isn't dead, it's there to be discovered, and energy goes up as rational actors act in their own self-interest because of the properties that emerge from the protocol. All of these things act as a catalyst for the expansion of Bitcoin's roots into the physical world and the informational realm of the hive mind. And what that means is the end result for you, the person who plugged their energy into the system in 2022, is more control of future reserves. Lots more energy, more ability to transform. And you have proven yourself to be a good steward of that energy. You are rewarded with more allocation responsibility, right? Use it wisely, or someone else will. You have to read the room, understand the current regime, and see how it fails responsible actors. This can't work. Governments and banks had their time, but they've been outcompeted by a more efficient system. Now it's just a question of how long the transfer takes. The entire financial service sector exists because of the manipulation of money. Their job is to see where the flows will end up. It's a full-time job tracking where stolen, misallocated energy will flow to next. All right, think of the wasted energy trying to find areas that won't be brutalized by debasement. So much inefficiency. They aren't necessary when monetary policy is fixed and value becomes the end-all and be-all. Your claim can't shrink without your participation anymore. When you opt into Bitcoin, you are removing the ability for others to control your energy reserves. This is good. This is better. Mismanagement of energy has never been more apparent than it is today. The system is past its use-by date, and the value transfer is well underway. Nobody can shield themselves from the reality that the legacy system is forced to rob from everyone to continue to operate. People will only put up with it for so long. And in the end, you can opt out, or rather opt in to a better system, one that rewards sharing and value creation. So you come for the number go up tech, and you stay for the revolution.